Mortgage demand is down one half from what it was a year ago, according to the Mortgage Bankers Association. Rates are high, home prices are high, and lenders are in the lab trying to figure out the hacks that are going to make your payments more affordable and earn your business. So, we're going to look at some of the common strategies used by lenders when rates are high so that you get a payment that you can afford. The biggest thing that you must keep in mind, is it worth it and will it work for me? We're going to take a look at ARMs, rate buy downs, and refinances. So first we're going to talk about an ARM. An ARM is an adjustable rate mortgage, right? Your rate will change with this type of program. Your rate's going to be lower at the beginning and then it's going to increase as it matures. You can get 1, 3, 7-year ARMs. You just need to talk with your lender to see what they're offering. And basically what that 1, 3, 7 means is that if it's a 1 year, you're going to have the lower rate for 1 year, and then that rate is going to adjust to a higher rate, versus 3 years, which you may have the lower rate and adjust. So they're all different, but that's what the ARM stands for, is this adjustable rate. Now you must be able to afford the ARM now and when it matures. If you can only afford the ARM now, then you need to make sure that you're able to sell and or refinance under that program. But what happens if you can only afford the ARM now and then you can't refinance? You know, a lot of people, they say, oh, I'll just refinance, or people tell you, oh, you can just refinance. But what happens if you don't have equity in the house? The equity doesn't move in that time period, or you have low equity, or you change jobs, and sometimes there's a window of time they want you to be in a job before you can refinance, or you lose your job and you can't refinance, because what that refinance is another bank buying out your loan and giving you another loan. So what happens in those situations? You need to make sure you do the math, that you understand the math, and that you completely understand what it is that you're getting yourself into. Right? So the second thing we want to talk about is rate buy down. Now, what a rate buy down is that you're paying points to get your rate down to a more affordable level than the current fixed rates. Right? So you're paying to buy down your rate. You are paying to buy down the rate. It's not something that just magically happens, or it's not just something that's kind of said out there. We kind of turn it into taglines as far as rate buy downs. No, you are buying down the rate. And now the money you are paying, you're going to want to make sure that you understand that what you're paying for the point is worthwhile for you. Okay, so some of you may say, well, why wouldn't it be worthwhile for me to buy down the rate? But basically, you need to understand what your break even point is. Write that down, what your break even point is. So, I'll give you a scenario. 1 point usually, or 1 point is 1% of your loan. Right? So let's do an example. Let's do an easy example. You're going to take out a $100,000 loan. 1 point is going to be $1,000. Now, your rate's not going to go down 1 percentage point. Your rate may go down 1/4 of a point, and you just need to talk to your lender to understand what that buy down actually is. So, at what point are you really saving? So let's use the same scenario. You've got a $100,000 loan. The rate is 5%. You buy 1 point for $1,000 to buy your rate down to 4.75%. So at what point are you saving money? Well, at the 5%, your mortgage rate may be $550. At the 4.75% interest rate, your mortgage is $425. So you're saving $25 a month. Now, at what point does that $25 a month add up to $1,000 in savings? Well, if we take 1,000 and divide it by 25, that gives us 40 months. So you must have that loan for 40 months before you reach the break-even point. That's 3.3 years, right? So that's when you know that for that particular buy down, you've done the math, you know that you must be in the house for 3.3 years in order to reach a break even and create savings. If you are not going to reach that point, there's really no reason to do that buy down. All right, so other considerations that you want to think of are the sellers going to pay towards the buy down rate? And if they are, would it be more feasible or better for you if they were helping to pay closing costs, the other closing costs versus buying down the rate? Or what else could you be doing with the money that you'd be investing to buy down the rate in the interim? So there's a lot of different factors or scenarios that go in, and you just really need to do the math and understand how it all plays and comes together. Sometimes we get fixated on the rate and not necessarily how all of the math is playing. All right, and the third thing we want to talk about is refinance, even though we've kind of sprinkled it in here. So you have to be careful to just kind of, in earlier videos, I talk about being willy-nilly. We have to be careful about being willy-nilly about throwing around refinance, because even though it's a really great option for us to be able to refinance, there are situations in which you're not able to do that. So you need to think through those situations. You might have no equity for a little while. You might have low equity. You might lose a job, or you might transition into another job. So I hope that you like these points and these conversations that we're having. Here's what I'm going to offer you. In the comment section or in the description, I've given you a buyer's guide. If you're a first-time home buyer, you're just a home buyer, and you want all of this information, what all of these terms mean, it's in the buyer's guide. Download it at your convenience. I'm also going to give you a link to a calculator. Use that calculator so that you can help do the math on these situations. And then I'm also offering you consultation. If you've got any questions, or leave them in the comments, or call to the number on the screen. I'd love to hear from you. Please subscribe to the channel, set your notifications. We've got lots of great videos that's going to be coming out later. We will see you next time.